everyone. On check. And then we can get started. So it's a very interesting day, isn't it? Okay. Audio should be coming out okay on my side, so we can start with a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account any particular objectives, financial needs. Therefore, at all times, you should consider the appropriateness of advice before you go further. If these are Forex high leverage products that carry a high level of risk and are not more than your initial deposit, so you should ensure if the Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You're reminded that past performance is not indicative of performance. Okay, or we can talk about gold. We can talk about anything you want. Any questions? Any requests? Just type it in. We'll take a look at it. All right. Just say it once, and I'll talk about it. Okay. So, few very interesting developments going on. So, if you guys watched the Outlook on Monday, we did talk a little bit about SVB. We talked a little bit about Signature Bank, how the U.S. joint statement, basically more of a mini bailout rather than anything else. But we have something much more interesting today, right? You can probably see that there's a huge drop in the market, and if we take a look at the European session, pretty much all the European indices are in free fall, right? We've got France, we've got Germany, got UK. All of them are in a free fall. The question that comes up is, and we saw this reflected on the currency market as well. My indication was obviously the Japanese yen. Something is up, right? Was it something the Bank of Japan said? Um, Something more of a run to safe haven? That was the kind of information I was trying to dig for the past few hours. Kind of figure that out. We have a little bit of a problem in the European stock market. So, to name a few huge names, right? SVB, Signature is all right, pretty big. SVB wasn't that big. Now we've got Credit Suisse, right? And Credit Suisse, Societe Generale, and a few other Italian banks are currently in a trading halt, right? So, not able to trade those. It is in a trading halt at this moment because we have a drop of about 24 to 25% in Credit Suisse, just in a couple of hours, right? So basically that drums it up. So we've got the European session kicking off with not sure if it is going to be a contagion. Is it going to be a spillover from what's going on in the States? But it is what it is, and we are going to take advantage of whatever the momentum kind of gives us at this point in time. Trading those indices should be a good run, and I think there's a little bit more room to go, a lot more room to go, right? But show you what's going on with the euro yen. This is significant. We had a drop from 140 150 and now we are approaching 141, and there are no signs of this one stopping anytime soon. This is close to 400 pips in a period of 1 2 3 4 hours, right? So this is huge, and big shout out to those that managed to short this off that rejection at 145, because you guys just scored big on the euro yen. Now, because this is all happening in the European stock market. So we can tell the euro, it's basically the one that's being ravaged by the market. So we've got a huge drop in the euro Japanese yen. The euro USD is currently trading below 1.06. We are just waiting for this one to go down a little bit more towards 1.05. There's a few confirmation on 1.05. We did talk about this in the outlook. If you guys were paying closer attention to the outlook, I did mention a little bit on a potential head and shoulder that could be forming on the Euro USD with the neckline at 1.05, right? So this is happening right now, guys. The drop was 1.0750, now all the way down below 1.06. Pretty huge drop for the euro. Show you the shampoo. Oh, we'll start here. It doesn't matter. As long as you guys get the neckline, and we're looking at a little bit of a shoulder, pretty much at around the same price. So we are waiting for that break to happen. If that break happens, then we are going to see a little bit more of a continued run to the downside for the Euro USD in a serious tone on this one here. Because we transitioned below the Ichimoku. Let me hide a couple of things. Let me hide the I actually need that fib. Let me hide this head and shoulder for a little bit. Maybe I'll hide the pixels for the week, right? So what we have here is we have a transition below the Ichimoku cloud, and we have price retracing all the way back to retest some of the supports. So sorry, some of the previous support becoming resistance, although it kind of overshoot a little bit. Whatever happening right now, this is good. This is ideal because right now, if the trading halt gets lifted and the sell-off continues in the European stock market, that is going to spill over into the American market as well, right? We're likely going to see the U.S. futures dropping down as well, especially the banking sector. I'm not sure if things get worse, then there might be a potential crash over there. Maybe some other banks in America will probably get a trading halt as well. Doesn't matter. Whatever it is, the sentiment right now is building up towards more of a run to safe haven. The Japanese yen benefits this. Gold benefits this at this point in time, and U.S. dollar, obviously, even though the CPI wasn't that, it was per consensus overnight. We didn't see a lot of action last night, so it was actually a great setup this morning because pretty much everything was in a range bound market condition, waiting for a breakout. We had that breakout in the UK session, right? So let's take a look at this current condition on the Euro USD. It is a huge drop to the downside, and I think we are not quite done yet. We would potentially see further drop to the downside for the Euro USD. The question right now is, can you trade this? Yes, you can actually trade this. If you want to go short on this one, you can go short on this one. The biggest question is, where's your stop loss going to be? So this is going to be a little bit tough, right? Because logically, if we take a look at it from a technical standpoint, things are happening really quickly in the past 3 hours. We basically have three black crows on the Euro USDs. A candlestick pattern that we don't typically see a lot. So this is a serious reversal going on in the market. Sentiment is super bearish right now. You guys want to be quick. Going short right now, it's a great idea. Just thinking on where do you want to put your stop loss, because it kind of throws out, where's the logical stop loss? Where am I going to place my stop loss if I start going short here? Because the logical stop loss would be way above 1.0750 in terms of your potential target level. That's a lot of order around 1.05. Any trip below 1.0480, that's likely going to cause a slide for the Euro USD. That slide, we were talking about serious business kind of slide. So yeah, really just waiting to see what happens when price gets to 1.05. If price gets to 1.0480, we would definitely see a huge slide on the Euro USD. Right now, this is still progressing lower, right? Whatever time frame you want to look at. Obviously, if you want to take a look at this on the 15-minute time frame, it would probably make a little bit more sense. Let me just bring it up on the time frame, right? So we've got sessions. We are pre-US session right now at this point in time. So this is a pretty significant drop on the Euro USD on the 15-minute time frame, and get that. That's how severe the drop is. right? It's so severe. It's going to be tough looking for a retracement. The Stochastics on the 50 minutes is laying low, really low at around 5. This is likely going to drive prices down. So if you're thinking what should we do on the Euro USD, we just lost 1.06. The next available stop on this one here is about 1.0550. Below 1.0550, it's pretty much nothing until 1.05. Right? So I would say if you have your short position on the Euro USD, keep that short position. The momentum is still there. Don't even go against the market at this point in time. We are really taking advantage of a, a serious problem in the stock market. A 25% drop in Credit Suisse stock prices within a 2 hours window. It's huge, right? Credit Suisse, it's the largest bank, second largest bank in Switzerland. So you guys probably know what Credit Suisse. Anyway, there were rumors about Credit Suisse starting October last year, but anyway, really nothing else. But the cause of the drop was basically the whoever's backing the Credit Suisse, which is actually funds from Saudi Arabia, basically saying, "No, we're not gonna give you any more funds. So if you have any liquidity issues, you sort it out yourself." So we have a huge drop on that. So a trading halt is in order, and I'll just say, you know what, take advantage of that momentum. We have that, current sentiment in the market. Not even bothering going against that. So I think we would see a further drop on this one. What makes it interesting for the Euro USD? It's really up to preference, obviously. This one just break below 1.06. So if you want to go short 1.06 below 1.06, do that. In stop losses, you can have it at above 1.0660. That's the most logical stop loss, right? You can target the drop towards 1.05. Risk reward ratio probably great. But what we're relying on this one here is that we want to see a break below 1.05. Any nudge below 1.0480, that's going to trigger a huge drop on the Euro USD, which makes this really interesting. Okay, and you guys probably wondering, why do I have the RSI open? Because I want to know how strong this trend is. Current RSI right now, it's going on really strongly. It is at 17, so we could actually see further drops on the Euro USD. Okay, so let me pause here for a little bit because I want to focus on the Euro USD here first. Why is the euro dropping? I explain it. So could we assume Swiss Bank is in problem? Are they having issues right now? They don't have issues. The Swiss Bank obviously come up. That if there's any issue, then they're not really accepting government help. But hey, things could change. I don't think it is that bad. I think this is a little bit more of a whatever's happening in the US. People are afraid of contagion, spillover effect. Hmm. One more thing with the euro, and let's focus on the euro a little bit because we've got the ECB tomorrow, right? So the ECB is set to hike 50 basis points tomorrow, right? That was basically what's confirmed by the ECB. Can things change? That's going to be the question. How bad is it going to be today in the stock market? And if it's really bad, they won't hike 50 basis points. They might hike 25. They might actually hold it off, depending on how severe today plays out in the Eurozone, right? But the meeting is tomorrow, and they can still say, hey, look, we've got this banking problem. It pops up out of nowhere, right? We might actually want to hold off a little bit. I know inflation is still high. This is what Lagarde's going to say. But hey, there is that risk. If we hike it, things could get worse because whatever's happening with SVB and Signature, the American market pretty much blame it on the FOMC hiking interest rate. So that was kind of the argument on where the US dollar was going to go. So we had that CPI last night, and everyone was like, well, what's going on here? Yes, as per consensus, met consensus, doesn't really grow. Core CPI monthly gains a little bit, but that's pretty much it. So everyone's like, what should we do? because no one can actually kind of pinpoint what should the FOMC do, because the FOMC needs to hike by 25 basis points. From the CPI numbers and the unemployment rate that went up, I don't think they're going to go with 50 basis points. So it boils down to whether or not the FOMC is going to hike, or they're not going to hike because of what's going on with SVB and Signature, right? So this is the same issue with ECB tomorrow, right? Because we got Credit Suisse right now. So it's Societe General, right? And is it a spillover? I don't know. In all honesty, I don't know if it's going to be a spillover or not, but it is what it is. So we'll just take advantage of it. All right. Dollar index is bullish. The dollar index is not bullish at this point in time. The dollar index dropped below 104. So we can't really call the dollar index being bullish at all. So it's not really going in the same direction as gold. But gold, as I mentioned, I think we did talk about gold on the outlook. There are a couple of resistances, 1925 and stuff like that. Basically, the daily, we've got a cap at 78.6. We did mention this. Sorry, this was on Monday. If it does break above 1900, then we are likely going to see that grind towards 1925. We are basically right around there, about 1923 at this point in time. Can it go a little bit higher? It is still likely going to be capped at 78.6%. But again, whatever is developing right now it's developing real time. So this is actually very interesting. Could we see a similar situation to 2008? I don't think we are going to be looking at that situation, but I think this is a very interesting development in the market, and this is actually very interesting for you guys as a trader to be experiencing a lot of this fun stuff in the past 2 years that's going on in the market. Anyway, gold, I don't see this moving in the same direction as the dollar index. So right now, dollar index at kind of a little bit down. So I'm not really sure. Remember that the dollar index, there's a little bit of a delay on the dollar index as well. And also in terms of the drop, right? We got the drop in the Euro USD, we got the drop in the Aussie USD. But all of these drops are limited, right? Remember this on Monday, the market opens with a gap. The Aussie USD is still far away from that gap. The Euro USD actually filled in that gap. All right, let me just show it to you again. Okay, the gap for the Euro USD was basically here. It was basically just right before it kind of slides down and crashes on Euro USD. The Pound USD, we are basically at that gap right now. Not sure if we are actually going to even close the gap, but we still have that gap. That gap is still between 1.2050 and 1.2. But we all know the Pound USD and the Aussie USD is still pretty well supported. And this is probably why you can see with the Euro USD, the dollar index, it's not really flipping up really high. I'm not sure if it's going to be isolated to just the euro at this point in time, but you know, if you're trading the euro, just take advantage of that drop right now, whatever is going. Yeah, the Japanese yen is crazy. I mean, go crazy on the Japanese yen. There's obviously a run to safe haven. If you're figuring it out, the first one to give out a reaction is actually the Japanese yen. Things started moving with the Japanese yen about an hour earlier than the US dollar itself. So this is kind of the first trigger. Got a rejection at 145, break 143. This one here, I think someone in the community was asking 140, 150. Is it even possible? We are way below 141 at this point. At this point in time, we are actually 140.78. So Euro Japanese yen, also a no-brainer if you guys want to trade this one. This one has a next potential stop at around 140. You guys can still take advantage of that. So yeah, either you guys missed it, or you guys, are a bit late to the party. But I think we still have that momentum at this point in time. We can talk about all the other Euro crosses if you want to, but it's likely going to be about the same scenario. Right, Euro New Zealand, a lot of momentum left over. Don't worry about this one here, right? We got 1.7 coming up soon. So again, there's a lot of orders around 1.7 on the Euro New Zealand, just like 1.05 on the Euro USD. And take a look at the Euro Pound. Okay, also losing a lot of stuff on the Euro Pound. We got a rejection at the Ishimoku Cloud on the hourly time frame. Strong rejection on the Euro Pound. So pretty much everything Euro is trash right now. So if you want to take advantage of whatever is moving in the market, hey, let me give you one possible good strategy. I don't know if it's good. I wouldn't do it. But if you think about this current scenario where there is that sell off in the euro right now, I don't know. Maybe open up one position on every euro crosses, go for 5 pips. It adds up, right? But we're looking at a lot of movement, and I think there's a lot of momentum left over for this one here. Price can really go a lot further at this point in time. I'm not sure what's going on with the trading hall. I'm still um, still keeping it up on the terminal here, but hey, uh, want to know if the trading halt has lifted or not. But if the trading halts get lifted and the market continues to slide, there we go. You got a no-brainer on all the euro crosses, right? The RSI, everything, it's all dropping down really quickly. In terms of resistances on the RSI on the euro pound, we've got 60 as a resistance, so we know the downtrend is really strong on the euro pound. All right, moving back to the Euro USD, same thing as well. All right, we might see a little bit of a bounce here coming up. But we flip onto the 50-minute time frame. Can we identify a few potential, retracement levels on the Euro USD? We got 1.0625 roughly to about 1.0650. Just a huge pullback. Thought we were actually going to look at that, but it is what it is. So, a US session just started. It's pre-market. The US session hasn't started, so we got about 2 hours window right now if you want to trade a breakout. I think what we're looking at is a potential break to the downside. So price might, do this for the next 2 hours. Might actually create a little bit of a range. We can do this as further break to the downside. But what I'm looking out here, it's really more of a continuation of the drop on very close to 1. All right. Check on the pound USD. I think I just did check on the pound USD. Anyway, here's the pound USD. I'll get rid of the actually I can't get rid. Okay, so let's focus just on price. We are basically back to where that gap was on Monday. We're not quite really breaking a lot of support for the pound USD. So sterling traders, unfortunately, because the euro pound is dropping down like crazy, it's really supporting the sterling at this point in time. So the pound USD, it's still a little bit boring. It's still going to be constrained between 1.21, 1.2150, 1.22, 1.2050, 1.2. So we basically scaled a 50 pips range for the pound USD. What should we do with the pound USD on the hourly time frame? This is basically just transitioning, potentially transitioning below the Ishimoku cloud on the hourly time frame. So one level to watch out for would be 1.21. Max at 1.2150. If we have a little bit of a rejection, it could be that. Then we can potentially close the gap. Right? Price could go a little bit higher and close the gap. Closing the gap means market pulling back to 1.2. So obviously it's not going to be a fair comparison because you saw the drop in the Euro USD and stuff like that. At least the on the sterling side, that's pretty boring, right? It's not really that interesting. You want to trade within the range on the sterling, that would be the best case scenario. 1.2. If there's a rejection, you can go for a potential short on levels. Can you go short? If it doesn't retrace, yes, on one condition that it closes below 1.2050, then you can go short. targeting 1.2. That's gonna give you about 50 pips potential gain on the pound USD. Sterling yen, it's a little bit better to look at. So this one has basically reached 168. I'll get rid of that. Okay. Key levels to watch out for. This is done, 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 done. 161.50 would be your immediate resistance for the sterling yen. I would move this one to about 162. So you'll be looking at about 161.50 to about 162 as your potential resistance cluster. This is going to be exactly where the HMO cloud is located. Senko A is about to cross below Senko B, so I think there's a lot more momentum to go to the downside for yen crosses. A lot of damage on euro yen. The sterling yen is probably the next best thing for this one. So yeah, I know some of you guys have that sterling yen position. If you guys have it, hold it. Just let it run. Go nuts with this one. Next stop for this one, we've got 160.50 and a 160, right? So, right, you got 160.50, and then below 160.50 would be 160. Break 160, that would trigger a lot of it will trigger a huge off on filling in, right? Do I anticipate a little bit of a pullback at this point in time? The momentum says nah, straight nah. The fast stochastic is dropping down so far away. The gap between fast stochastic and the slow stochastics, that's pretty huge. We're talking about 35 in terms of the gap there. It's huge. So short-term momentum still points to the downside. It's likely going to pressure this a lot lower. If it does break below 160.50, 160, then yeah, you're likely going to see a second run on this drop. It would actually be about potentially nearly double than what it is right now. But yeah, we could potentially see that run towards 168 still on sterling yen. I'm not even considering 127.2, which is at 159. I think we're potentially going to slide right down to 158, 157.50 if the current momentum holds up. All right. The Euro USD is to be confirmed bearish in a trend. We have to break out the support at 1.05. You do. Like, let me put it. You do. So with this one here, we basically want to see price breaching, at least touching 1.05. It's going to trigger a lot of orders because there's a lot of stops line up just the 1.05. So if this one manages to reach 1.05, it will trigger a lot of stop losses. This is whatever you want to call it. You want to call it order block or whatever. Institutional traders are going to have their stop losses. A lot of retail traders holding a long-term position or swing trading are going to have the position of 1.0 because the market is anticipating that price does not go back to 1. So if it does touch 1.05, very interesting, because we go by the current Fibonacci outlook, we just bypass 78.6, right? 1.05 is basically about the 100% level. The next available stop below 1.05 is actually 1.0350, right? Below 1.0350, you know where the 161.8 is located? It's at about 1.0150. It's huge. It's really huge, right? We're talking about huge on this one. Even if you wait for that breakout at 1.05, you'll potentially see further drops lower, and that's a huge drop to the downside. I'm not really too concerned. With the momentum, we are potentially just waiting for the trading halt to be lifted. Want to see what's going on. stock market picks up, then it might pick up, right? If you're thinking for a pullback, then you want to pull back at about 1.0660, does get rejected there, then yeah. All right. So let's check. I think there's could be a new development. Not getting. Yeah, I don't think the trading has resolved yet. PPI. Yeah, no, I thought PPI is going to be about hour's time, but all right, let's check PPI. What's the PPI? Take a look. PPI. All right, PPI. It's at negative 0.4%, which is lower than what the market is expecting. Month on month PPI is negative 0.1. So we have a drop on inflation. This one might lift this a little bit, but look, hey, PPI is low. Might see a little bit of a recovery on the Euro USD at this point in time. I would just wait for the pullback to happen, and I would continue going short again on the Euro. The Pound USD, we might actually see this one pick up again, but again, Pound USD, it's clustered. So as I said, we might see the pullback to 1.21, 1.2150, but it's going to be a slow grind because this is going to be trading within the Ichimoku cloud. US retail sales was down negative. Yeah, retail sales PPI. For PPI, it's flat at 0%. Consensus was 0.4%, so this is more than expected. Retail sales down from 7.7% to 5.4%. PPI year on year, 5.7% was the previous number. Consensus 5.4. We have a 4.6% drop. For PPI year on year, 5.4%. Consensus 5.2%. We have 4.4%. So we basically have a full percentage of everything. So yeah, this is this is signs that the producers inflation cost is actually coming down, right? So the inflation cost from producer side, it's coming down. So I think that's great. But doesn't change the problem because the problem is no longer whether inflation plays a big part of it. It is still way higher. Like CPI at 6% is still way higher than 2%. It is better. I think it's the lowest since September 2021, but it is still high. So the argument right now is with whatever information it is, the Fed should still be hiking by 25 basis points. Will the Fed stop? That's so right. We got PPI. If nothing happened in the euro side, we probably would have seen a much faster rise because that's a huge drop on the PPI. What full percentage on a year on year? That's really huge. 1.1% actually. 4 is 1%. So without what's going on in the banking sector right now, it would probably lift this one higher. But I think market sentiment right now at this point in time, they're a little bit more concerned with the banking as bad as 2008. I think a lot of people are looking at that scenario, but those people talking about those scenarios probably didn't live through it. So yeah. All right, bullish divergence on EU is still valid with this news. The bullish divergence on the EU, the hidden bullish divergence on the EU, it's basically what I want to see invalidated, right? Because it just doesn't make sense anymore. But yeah, it's still there, unfortunately. But I do really want to see it invalidated because right now we see a momentum picking up on the daily time frame. Price is not really going in the same direction as momentum. momentum points to the upside, price is dropping down to the downside. So I think yeah, we might invalidate the hidden bullish divergence. That's why it's there, right? But once price touches 1.05, it's gone. So we got head and shoulder, neckline 1.05. You see price breaking below 1.05, you are guaranteed to see a huge slide on the Euro USD. So just keep an eye out on 1.5. If you want a learning experience to see how it works, but there's a lot of stops lined up at 1.05, such a key psychological price level. We lose that level, we're likely going to see a huge trigger to the downside. I thought that crypto is the only market that haven't been affected by it. Albert, you know my stance on crypto. But yeah, let's talk crypto. So, how do you want to look at crypto? Do we want to look at how do you call crypto enthusiasts, right? Well, what are they called, right? Anyway, so crypto lovers probably gonna say, hey, why stick with the bank, right? The bank screws up, might lose money with the bank. So we don't believe in the banking system. Let's put our money in the crypto market, which messed up because to me the crypto market isn't backed by anything. But can argue that that could be the cause, that could be the trigger that people are buying crypto again because they say, hey, banking sector is messed up. Let's just do crypto, right? Or we've got a lot more logical traders thinking, hey, the crypto market fell down from 23,000. It was cheap. It was at about 20,000. 20,000. Let's buy back in. It pushes it up to 25,000. This one here, we have surpassed 25,000, but we haven't actually had a close above 25,000. So for the Bitcoin to push up higher, we need to break 25,000, obviously. In terms of momentum, we still have a lot more momentum to go to the upside, at least on the daily time frame. On the hourly time frame, it is likely going to be more of a retracement. This is likely going to be revolving around 25,000. So we'll see how strong that break above 25,000. This one spiked up above 25,000 to about 26,000, but there wasn't a lot of buy orders up there because it's more on people taking profits rather than anything else. So this is going to be a different scenario from the Euro USD, where a lot of people are having their stop losses there. This is more like, yeah, market run up. People are taking their profits at 25,000, 26,000. So that creates that end wick. But there wasn't any order lineup beyond 25,000, 26,000, because if there was order lineup there, we would actually see a much faster jump on Bitcoin. We would actually see 27,000. We're not looking at graph. Yeah, we talk about Euro USD for weeks now. This one here, we were anticipating that at about about two weeks ago, nearly 3 weeks actually. We had that transition back below the Ichimoku cloud that was on the 7th of March, which is last week on Tuesday, and then price pulled back up. So in my eyes, on the Euro USD, we have transitioned below the Ichimoku cloud. I think beyond this week, the biggest risk is basically the FOMC. I'm not sure what the FOMC is going to do. Not sure if they're going to be affected by what's going on with the banking sector. Would that be enough reason for them to not hike interest rate? And that question, we actually don't have to wait long because tomorrow's ECB probably going to give clue. If the ECB stop hiking rate or didn't hike, if they don't hike rates by 50 basis points tomorrow, for the reasoning that the banking sector is severely affected by whatever is going on right now, then that might give a little bit of a clue because the FOMC would likely do the same thing to control any spillovers, to control the contagion right? So we would have that clue from the ECB. But if the ECB says tomorrow we are still going to hike 50 basis points, I don't quite care what's going on with the banking sector, then yeah, and the FOMC would likely still continue hiking interest rate by 25 basis points or potentially even 50. I severely doubt that they will go with 50 basis points. PPI, it's dropping down really quickly. The PPI was dropping down really quickly. Unemployment rate is picking up. So it's not reason enough to be given to the Fed to hike 50 basis points. Increased weakening of all major currency. Does gold triggers up? Does that mean Aussie strengthens from other currencies? I have no idea what is that question. You mean like what's the correlation between currency and gold? Pretty much zero. Gold triggers up. You mean gold rallies up? Gold rallies up because it's a safe haven. Something happened, and I just explained this in the past 30 minutes about what's going on right now, that the world is kind of experiencing it right now. But yeah, if you guys need a refresher, Credit Suisse had their shares drop by 24 to 25% when the European market kicks off. It's currently at a trading halt. I don't have any word yet that this has the trading has resumed. I know that Credit Suisse halted. I know Societe Generale is halted, and those are the two big names. A trading halt to prevent further drop to the downside that could potentially crash the stock market in Europe, right? So there's a run to safe haven. That's why you see that sell off in pretty much everything euro, right? We have that sell off in the euro yen, which gave an early indication that rejection at 145. Once it breaks 143, we would know what's really going on. So, as I said at the beginning, you guys could open up euro yen, euro pound, euro whatever, and you go short, take 5 pips out, adds up how many currencies you open up. Maybe it's 10. Hey, it's 50 pips. But what I'm trying to say is there's still leftover momentum for slide even further. So maybe tonight, if we take a look at any other currencies right now, it wouldn't be interesting because take a look at the Aussie USD. It's like, yeah, right? The gap hasn't been closed, still so far away. Got support at 66, but that's pretty much it. Momentum is about to end on the Aussie USD, right? Things are about to change, on the Aussie USD. The pound USD is like, it's crab, it's range bound, right? I'm expecting a rejection 1.21, 1.2150. How far can it go? 1.2. It's going to be a strong support. So if you want to focus today on trading, focus on the euro. Whatever the market is doing, if it crashes, you know, people will suffer. But hey, I'm a trader, and that's how I made it in 2008, 2009. That was like my best trading season ever, right? When the market crashes like nobody's business. That's, I don't know, call me evil, but morality aside, if the stock market crash, take advantage of that momentum because everything in the market is probably going to go one way, right? Think about it. The European market is the US market is going to open soon. If traders in the US wakes up in the morning and reads, hey, Credit Suisse, man, it's getting a trading halt right now because it dropped 25% in just a period of less than 2 hours. They're gonna be panic selling the stock the banking sectors tonight, so it might actually be red. So take advantage of that drop, take advantage of that fear. The US 30 futures, all right, it's already dropping down 600 points right now. This is going to open in the red. There's a lot more room to go. So the US stock market is probably going to go in the red. Trading hold get lifted. The stock market and the sell off continues for Credit Suisse. This is going to have a contagion effect on the US stock market. So that's kind of a no brainer that you're looking at a negative sentiment day. So I would say take advantage of it. I don't really quite care about anything else other than, hey, we have momentum on our side. We've got volatility on one side. We've got, really one-sided direction going on in the market right now. Take advantage of the plunge. That's all I can say, right? Feel free to you want to trade your US 30 indices. Uh, this is already interesting. This pre-market is already dropping down 615 points. Opens up, it could go down 31,000, 30,000, 530,000 easy on the US 30. So I think there's a lot more room to go for this one, right? There's a lot of momentum left over. If you take a look at where it is right now, reaching 31,000 shouldn't be too hard. If the banking sector crashes, this is going to drive the S&P 500 lower as well. So yeah, take a look at the momentum. Huge leftover in the momentum. So US 30 S&P 500, I would be looking at that as a stronger sell off. The Nasdaq probably not as much. So don't worry too much about the Nasdaq is different technological rather than the banking sector. But if you take a look at the S&P 500 and the US 30, it's going to be heavily affected by what's going on in the market right now. So there's a run towards safe haven. The Japanese yen is going to benefit. The US dollar is going to benefit. Gold, it's going to slightly benefit. Benefit slightly, but it is gold. It's really close to a resistance gold, so I would be a little bit more cautious for gold. All right, it's really approaching 78.10. That's about 1926. Beyond that, we still have 1950 though for gold. So if this is your cup of tea, this is not my cup of tea. I want to be trading something. I would be looking at the US 30. I would go for a short on the US 30. I would still go for a short on the Euro USD, the Euro Yen. One thing that I'm majorly anticipating is for the Euro USD to touch 1.05, because once Euro USD touches 1.05, essentially game over for the Euro USD. All right. Okay. So let me go through any questions. Let me know. What's going on at the London session? Suddenly all yen and major pair drops. Explain that. In my view, pound USD daily in main trend bearish. However, the range bound market. Please correct me if I'm wrong. Yeah, you are technically correct. So with the pound USD, on the daily time frame, we actually find a rejection happening at the Ichimoku cloud. Let me just delete this, right? We actually have that. We never actually transition above the Ichimoku cloud. So if I zoom in, take a look at this. Where it closes exactly at the Senko. Then the next candle, it dropped down inside. We are back below the Ichimoku cloud for the pound USD. So technically, yes, we're still in a downtrend, and the hourly time frame, it's a range bound market. So yeah, pick your poison. But my hint for you, it's the euro. The euro is crashing. The European stock market is crashing. So the euro is crashing. Trade the euro while it's crashing, right? The stock market opens up in America, and if it's not done yet in the euro, the US traders are going to sell off the banking sector as well. That's going to create a potential drop in the futures market. So this is it's just speaking from experience on basically what happened when stock market crashes. So I've been through a lot of stock market crash, right? Got a lot of flash crashes, and that's basically what it is. It's not going to bounce back up like within the day or so like that, but it's more like, hey, I saw my friend in the eurozone. They're suffering losses, so let's not suffer losses. Let's cut our losses. Let's get out the stock market, the banking sectors, the banking stocks, and it's just gonna roll on. It's just gonna continue. And then, hey, if the U.S. market is so bad, tomorrow the Asian sector is going to get affected. The Asian stock market is going to go down as well. It just runs up. If the equity market tends to range bound, is it good? Anything that range bound, it's look, anything that ranges as bad. Does it, in your opinion, does it for the long term? It does create a stronger support and resistance. Yes, it's true. But whenever it's in a range bound market condition, it only causes pain for a lot of traders, including me. So yeah, Dramis Strike. We are about to end the session, but what you can do is you can replay this session because that's the very first thing I explained, and I've been explaining it for the past 1 hour. What happened to the euro market? Opening your sell position based on 50 minutes, it's fine right now with the current move. Yeah, by all means. You want to? That's completely fine. Just keep in mind, in terms of where you would normally place your stop loss, need to throw that thoughts away. Um, things have changed, right? When we started the session, the first resistance was at 1.0625. This one has now dropped to 1.0. The Kijun is flat at 1.065, so we are likely going to be within the range of 1.0560 to about 1.06. You're probably going to be looking at a pause for about maybe 30-40 pip range, and then another breakout is going to continue. It's not done yet, so I think that could be a potential re-entry into the market if you guys want to. But as a position trader, and whatever the momentum is telling us right now, I expect a deeper drop on the current one. We got stochastics below 20, and that's where things could actually speed up. So it's actually going to be interesting. And I know for sure I'm actually going to have a sleepless night because I need to trade the US market. And I'm not going to miss trading the US market. There's a lot of damage control to be done right now. But yeah, it's interesting because you guys trade the futures market. I think the futures market might be pointing to the downside. Big Short is coming? Nah, not as big as that. And remember the story about the movie Big Short? I lived through that, right? And it wasn't. I kind of predicted it about the same way, but it's not really. It was more on the subprime mortgage crisis rather than anything else on that one. Banking crisis happened in 2008, Lehman Brothers. But yeah, are we at that kind of severity? As I say, no. The bank has gone through more stringent stress tests, so it shouldn't fail. And comments coming up from Credit Suisse right now is that they're not really failing. It's really more of a sell off because of a fear of a contagion in the market that's going on right now. It's not really Credit Suisse at all. This is a silly question. Credit Suisse is at Switzerland. Why does the euro drop? Um, because Credit Suisse is not Swiss National Bank, so it doesn't matter. Funds funneling into Credit Suisse, you guys should know where that funds come from. Majority of them are from outside Switzerland, right? Oh, will I have a sleepless night with a happy face? You can probably tell from my face the past few days when the market goes crazy. You guys can probably tell from when I do my outlook this week. I am excited. This is what makes trading fun. This is what makes it interesting. This is what drives me, right? This kind of moments, the unpredictable moments like this, you can actually see glimpses of it this morning. And I posted this on Telegram and the community channel. You look out for breakouts. I dropped a lot of hints this morning. It was just smiley faces here and there, but a lot of hints. You guys trade that breakout day, you would have a smile on your face. And what I'm telling you right now is this is not too late, because all I can see right now, we are only halfway through the journey. I'm really expecting 1.05. I really want to see price going to 1.05, because I want to see how severe that drop is below 1. Red Bull doesn't work on me anymore. Okay. So we got 5 more minutes. Any other requests that we haven't touched on? But I think I pretty much cover everything else, right? We got Euro Yen covered. We've got Sterling Yen covered. We, wow, this one here. So did you guys get in just now about 141 when we were talking just now? Did you guys short this? We're reaching 140. This is going to break below 140. There's a lot more room to go, right? So this is crazy. This is amazing, right? We've got 500 pips. This is fucking drop in 1, 2, 3, 4 hours. This is superb, and momentum. It's there. It's huge. This is amazing. Euro yen is a good. All right. Anyway, so you got 140. This is likely going to break. I'm probably going to be looking straight at 138.50. Momentum wise, there's a lot of room to go, and this is going to be tough for the market to recover. Coming off. Okay. You share setups if you get a trade on the US session. I'm just following up trades on the US sessions, but I think most of the setups are pretty much my setups are always the UK session. So, uh, it was interesting. We had that UK open, and all of this happened. Superb, superb. Like that's the only thing I can say. It's super, and nice. All right, US oil. US oil below 70. So we actually lost 70. Okay. I'm not seeing anything. I don't see the US refueling at. But yeah, we lost 70. This is a big deal, but I'm not seeing a huge drop on this one here. I think maybe stops are line up at 69, 68. But yeah, I'm not seeing anything else yet. So could we have another sell-off on oil? We could potentially see that. So we never reach 80, 82. So basically, if tomorrow's ECB is not going to hike interest rate, we can see another drop for the euro. Yes, and I think market is pricing it right now. I think market is pricing it the potential for the ECB not hiking interest rate tomorrow. Uh, it is a conundrum because what the ECB does kind of have an impact on what the FOMC does. But what you're looking at right now on the fall on the euro right now, it's basically partly not just from the trading halt and stuff like that, but partly because of that trading halt, it might affect ECB's decision in in terms of hiking rates or not hiking rates tomorrow. Okay. All right. So oil. I wouldn't touch oil. I will let this one go because Biden says the U.S. are going to refuel oil at 70. So we'll see if they do that at 70 and see if we see any bounce coming off from 70. But again, with euro, yeah, I already said what I said for the past 1 hour on the euro. This one here, reading up the momentum, it's going to be very, very hard for this one to turn around really quickly. So just keep an eye out. All right. Okay, that's pretty much it. So this is more of a discussion on the euro. You guys watching this, and you guys come in halfway through. What I would recommend you stop this. You start reviewing this from the beginning, and we went through what's really going on. And I have a strong view that we might actually see a potential continuation of whatever the futures market is doing right now into the US market. So it'll be interesting. Okay. All right, guys, let's wrap it up for this week. Good luck with your trades. Don't forget the ECB stuff tomorrow. Next week we have the FOMC rate decision. But again, if you guys are not watching the outlook on Mondays, you should be watching those outlooks on Monday. So I'll see you in the next outlook that's coming out on Monday. Have a great day ahead. Good morning, good afternoon, good evening, wherever you